You're tuned to 938 Live, Monday evening at 13 and a half minutes after the hour usually means Money Wise on 938 Live.
Yes, indeed. It's a Monday evening, and it is Money Wise on 938 Live. I'm Keith D'Souza, and our guest will remain a mystery no longer, Mr. Dennis Ng, the author of MasteringYourPersonalFinance.com. And hey, Dennis has a couple of books that he's glad to give out to you if you call in with a superb investment kind of question. Of course, we are taking your calls on 669-11938. Let's kick the program off with, of course, Dennis once again. Dennis Ng, thank you for joining us this evening. And Dennis, this tumult that's been going on in the market seemed to have stabilized, but the Asian markets haven't been doing so well over the last week, primarily because of the tragedy that was unfolding in Japan. So I thought it would be a very opportune time to talk about knee-jerk reactions and perhaps defensive plays when, you know, the unexpected happens.
Yeah, definitely. But what I would probably still say that until currently the situation in Japan is still very unclear. The earthquake has happened, the tsunami has happened, so the damages and the economic consequences of the natural disaster can be ascertained quite easily at the current moment. So I think some analysts have put it at probably about $235 billion. That would equivalent to about 4%, 3% of Japan's GDP. So in actual fact, the natural disaster itself, probably the damage to the economy, to Japan's economy and so forth, probably is something that is we can predict and estimate. Okay. But right now what is still going on is the nuclear problem in Japan, and until now we don't know what's the status, because it can turn any way. If it turns to a total nuclear meltdown, then I really don't dare to think of consequences. But if the situation gets controlled, then probably I think last week the Japanese stock market will have probably seen the worst. And from now onwards probably will go through a period of consolidation and stabilization.
669-11938. We are taking your calls right here on 938 Live. Let's see who we have on the line. Susan.
Hi.
Good evening. Hi.
Good evening.
Good evening. You have a question for Dennis?
Yes, I have a question. Given the very unpredictable situation in the Middle East and the sharp rise in oil prices, is it safe to invest in gold now?
The commodity question, Dennis, which we've been dabbling with since the beginning of the year. Should precious metals be in somebody's portfolio, do you think?
The key thing for commodities is actually inflation. So the key thing to look out for is inflation. If inflation stays high, then prices of precious metals such as gold and silver prices would actually go up or stay high. In actual fact, like I also mentioned, you must look at the price of gold and silver and inflation from the other side of the coin. The other side of the coin is actually, it's a case of too much US dollar being printed. So it's a case of the supply of US dollar going up, which when the supply of money goes up and commodities, all these like the oil, your gold, your silver are finite, and the supply cannot go up in response to the increase in supply in money, then prices actually goes up. So in actual fact, I think the chance is for gold price and silver price to actually stay high. In actual fact, last week itself, you saw during the Japanese turmoil, and probably actually everything was sold. Basically, the oil price was down, stock markets were down, gold and silver were down. But you look at it in the last few days, now silver is close to US $36 once again, and gold is now above US 1,420.
So were you looking forward to that sort of volatility? Were you astute enough to capitalize on that situation, Dennis?
Like I mentioned, I'll probably put some money in gold and silver as an insurance. I'm not trying to make money, and just in case inflation goes up, that's how I can hedge against inflation.
Okay.
So between the two, gold and silver, as I mentioned before, silver probably look more value for money.
Okay.
Because compared to gold, right now the ratio is about 1 gold to close to $40, 40 ounce of silver. So if it goes to about 1 ounce of gold equivalent to 30 ounce of silver, then prices of silver might go up to like US $46.
Susan, I hope that answers your question.
Oh, yes, it does. Thank you very much. That's very useful advice. Thank
Okay.
you very much.
Susan, if you just hang on, just hold on the line for just a little while. Our very kind Felicia will take your call, and we will get one of Dennis's or signed copy books out to you as soon as possible. Okay?
Yes.
Thank you very much, Susan. 669-11938. Let's see who else we have on the line. Good evening.
Yeah, hi. I'm Mr. Ng.
Mr. Ng, yes, you have a question for Dennis.
Yes, I do. Dennis, given the volatility, especially when the tsunami hit Japan, and we actually expected the currency to drop, but essentially the currency reversed its cycle, it went up instead, and the G7 together with the Japanese government, they had to intervene to get the currency back down. Now, in a turmoil like this, whether it is natural earthquake or whether it is the Middle East, with so many uncertainties, how would you put your portfolio in a manner that it would allow you some certainty against the many kind of risks? How would you divide your portfolio? Long term, medium term? Medium term, what are we looking at? Long term, what are we looking at? What exactly are the safe bets during this period? And in terms of short-term volatility, what are the signs that we should watch out for?
Okay, Dennis, that was what we were trying to breach at the beginning of the show, hedging your bets.
Definitely.
Okay, and perhaps you could tell Mr. Ng what he should do in about a minute.
Sure, definitely. So basically, I ask myself, what if I'm wrong? Will I be financially okay? So if I think currency is going to go up, if it goes down, will I lose the bet? If I lose the bet, how much will I lose? So you always ask yourself, what if I'm wrong? So how I protect myself? I have some of my money into investment that have a capital guarantee. So personally, I have about 10% of my money in UK Traded Endowment. The capital guarantee comes from the cash value of the policy. So I have this. I have about 30% in cash, so that will be safe in case of any uncertainties. If the market crash or whatever, then I can use the cash to take advantage of an opportunity. So I have about 40% in very safe, 30% in cash, 10% in UK Traded Endowment. So that keeps 40% of my total portfolio capital guarantee. Yeah.
Okay, Mr. Ng, I hope that answers your question. Our number is 669-11938. Talking about money, we have to pay some bills right here on 938 Live. We'll be back and we'll speak with Mr. Low.
938 Live gets you talking. 938 Live. 938 Live gets you talking. Money Wise on 938 Live.
We're back with MoneyWise on 938 Live. Joining us in the studio this evening is Dennis Ng, the author of Mastering Your Personal Finance. He is also the founder of the portal housingloan.sg as well. And I guess it's very much a free-for-all this evening. 669-11938. Phone lines buzzing, all back-to-back. Let's speak with Mr. Low. Mr. Low has been very patient, waiting very patiently. So if you turn the volume of your radio set down, we'll get your question to Dennis straight away. Good evening, sir.
Hi, evening, Dennis. May I ask if in this uncertainty, which area should one be considering putting the money in? Would ETF be a good choice?
Dennis, there's been, well, in the media recently, should we go back into ETFs or stocks as well, you know? Your thoughts?
It really depends on how the situation unfolds. Like I mentioned, if the situation in the Middle East, Libya, in the next few days, probably, if the war ends, if the nuclear situation in Japan gets under control, then probably what happened in the last 2 months in the stock markets is just a market correction. It's very normal because STI went down from 3,200 to 2,009. It's only about 10% down. Anything below 20% down, I mean, nothing has changed. It's just a correction. So it could possibly, after this calming down of all the situation, the markets might resume its uptrend. So currently, all the major global markets, the uptrend have not been broken yet. They are still intact. So the relevant levels, important levels to look at For Dow will be 11,200. For the Hang Seng Index Hong Kong will be 22,300, and for Shanghai Index will be 2,750. So if these few major markets, the support level actually broke through, then probably is end, game over.
Okay, Mr. Low, I hope that clears things up for you. Do you have another question for Dennis?
Thank you indeed.
Thank you very much, sir. Let's go to Mrs. Lee right now. Mrs. Lee, good evening.
Good evening, Keith. My question would be, is it a good time to invest in stocks at this point of time?
Mrs. Lee, if you could do me a favor and just speak up just a little bit, ma'am. You were saying if it was a good time to invest in stocks?
Yes, and what stocks should we choose, to put our money in this time of volatility?
Okay, in this volatile market, Dennis, let's talk about sectoral investment or strategic investments. Or is it, anyone's guess?
Actually, I have already answered the question. I mentioned you must have the eye on the big picture. No point choosing the stocks if the overall market direction has changed. If the entire forest has caught fire, the stock is just like a tree. The tree will soon or later catch fire as well. So we need to watch out on the major stock indexes. So like I mentioned, Dow will be 11,200. If it stays above there, we are clear. For Hang Seng Index will be 22,300. If it stays above there, the uptrend is still intact. If the Shanghai market is above 2,750 points, then the uptrend is still intact. If it breaks below, then please get out. But if it stays above, it's currently staying above, like I mentioned to you, but nobody knows what will happen to the nuclear situation. And also, what if after Libya, there are further unrest in the three major oil exporters? Mm-hmm. The three major oil exporters are Kuwait, Iran, and Saudi Arabia. So as long as nothing happens to these three, we are safe. Oil prices probably will be staying between $100 to $110. It will not derail the economic recovery. It will probably just slow it down a bit. Japan's disaster will also just probably put Japan in a recession this year, but probably next year the economic growth will speed up because the reconstruction will start coming in, and it will not derail the global economy as well. Mm-hmm. But like I mentioned, if the nuclear situation gets out of control, if the three major oil exporters are in any unrest, then probably it's time to get out.
So that was what the kind of scenarios that you were talking about as well in the middle earlier this year when we were first talking. Basically, I think, Dennis, you have a crystal ball which we all of us are not party to. 669-11938 is our number. If you have more questions for Dennis, please do feel free to call us in. We'll be back with Money Wise after headline news and sports.
Money Wise on 938 Live.
We're back with Money Wise on 938 Live, and in the studio with me this evening is Dennis Ng. He is the author of Mastering Your Personal Finance, and of course he is the founder of the property portal Housing Loan SG, housingloan.sg. Dennis, before we went off for a little break earlier, we were talking about all the volatility that's hit the markets, and it's something that you more or less anticipated earlier on in the year. But if someone really wants to reach financial freedom, like we were talking about in the break, is working a 9-to-5 job going to do it for him or her?
I think for most people, if you just want to depend on your job or your income, probably you will probably be stuck at middle class. So if you want to break through from middle class to become rich, to become financially free, I think you need to know how to invest. If you look around, all the rich people around you, they all invest. And the two main things they invest in are stocks and properties. Not option trading, not forex trading, not stock trading. They don't do stock trading. Stock trading is staring at the screen trying to make 5%, 10%. Investors don't look for 5-10%. For me, I will only invest in the stock if I think the minimum upside potential is 50% or higher, and if the downside risk is less than half of that, So in this case, if the upside is 50, the maximum downside is 25%. So if I look at any stock, it doesn't satisfy this criteria, then I walk away. There are 800 over stocks listed in Singapore, so there are enough for you to pick those that have the double the upside and half the downside.
So cherry picking is the way you do it. Okay.
Yeah, so the rich, so there's a common saying, high risk, high returns. It's definitely not true. The rich never look for high risk. The rich always insist low risk, high returns. Well, what I mean is that 50% downside, 100% upside. They always look for upside double the downside. They will never look for high risk, high returns. They want to look for medium risk, high return, low risk, medium returns. I mentioned the simple rule of thumb to you is the upside must be at least double the downside.
Okay. So Dennis, how do you spend your day? Are you glued to the market screens every day, hour after hour? Or how do you spend your day, Dennis? And
Of course not. I think I've shared I'm a weekend investor. That means most of the time from Monday to Fridays, I'm very busy with my businesses. I own 3 businesses. I have employees I have to look after. I have a lot of clients to make sure that, you know, their customer service, all this is taken care of. So I actually own 3 businesses, and that keeps me busy from Monday to Friday. So I only have time to look at probably research on stocks or look at some of the news or consolidate and so forth during the weekend. So in actual fact, investing doesn't take a long time, and the key thing is to look for all these good risk-reward trade-off. So the last week actually I didn't do anything much. I sold some stocks on Friday itself when the earthquake started. And why did I sell was because why did I sell some stocks during that time? Because the Tokyo market was closing in 30 minutes just after the earthquake. So I know that Tokyo market didn't have enough time to respond to the earthquake. So I know that by Monday it's likelihood the prices in Tokyo will continue falling. So on Friday itself, I sold some stocks first, and actually last week itself I bought back some of the stocks I sold on Friday, and at about 10% to 20% below the prices I sold. So more or less now I'm back about the same as before the crisis.
we are also taking your calls on 669-11938. Of course, we are speaking with Dennis. Dennis, in your whole after this whole tumult over the last couple of weeks, you know, the unrest in the Middle East and, you know, the tragedy in Japan, were there any stocks that were perhaps insulated by all of this?
There are some
Any sectoral sectors, perhaps?
Yeah, definitely. Actually, there are some stocks that are totally unaffected by it because first, they don't have any operations in Japan, and its supply and so forth are also not in Japan. So maybe I give you one example. For instance, Bread Talk. Bread Talk's business is in Singapore and mainly China and Hong Kong, and it's in food courts and bakeries. How would this Japan's earthquake or nuclear affect them? I really cannot see how it will affect them. They don't source their materials from Japan itself. So there are some stocks, companies that are totally unaffected. When I say SPH, Singapore Press Holdings, in fact, it may be good news because there may be some additional newspaper being sold, and probably they can have more advertisements and so forth. So there are some stocks really they are not in any way affected by what is happening in Japan, but for some of the other stocks it will be very sensitive, especially in the travel industry, in the electronics, because a lot of people don't realize that why I'm so worried about the nuclear situation is if the nuclear situation gets out of control, Japan is the third largest economy, but that's not the important thing. But Japan is a leading manufacturer of a lot of products, components. In fact, Japan is the third largest steel producer. It's also make all the 92% of car, variable transmission, 78% of the electrode materials for batteries, and also they make all the polarizer film for LCD. So even your production of smartphones, your tablets, your cars, your TVs would all be affected. The prices of all these components may go up, And if let's say Japan's the nuclear crisis is widespread, then the travel industry, will suffer a lot. Korea itself has 1/3 of their tourists from Japan, so Korea will be most affected in terms of their travel industry. Singapore only has about 6% of tourists from Japan, so we are not that affected. So it depends on the situation, how this will affect the whole world.
Okay. We also would like to know, Dennis, besides how you spend your day, you were talking about the division that we keep saying on a weekly basis, it is the savings that get you to where you are in more comfortable position. Again, and it's a question I ask every weekend to most of the financial planners. If you're earning X number of dollars and you are struggling to pay your bills, it's very difficult to save. And of course, you have on a multiple occasions disagreed with me in that.
Definitely.
Yeah.
I remember my starting pay in 1993 was $1,500. In the first month, I still managed to save $300. I gave $200 to my mother. Basically, my take-home pay was $1,200, which worked out to I spent total of $700. So I spent about $20 for the 5 days a week on lunches. I eat dinner at home, and on the weekend I spend about $100 to spend, and in total I spent $700. And even on a pay of $1,500 at the time, I managed to save 20% of my income. Of course, prices have gone up, but what I'm trying to say is that saving is a habit. Currently, I actually save about 70% of my income because my lifestyle hasn't changed much. Not that I still spend $700. Now I spend more. I have families, I have 2 kids. Just on their tuition and enrichment, probably I spend more than $1,000. But what I'm trying to say is that saving is a habit.
Okay, are we as disciplined as Dennis? Tell us what you think. 669-11938. We'll be back in just a moment. Into the home stretch of MoneyWise right here on 938 Live with our very favorite guest, Dennis Ng. And of course, he is taking your calls and answering them at 669-11938. Susan, when you called in just now, we were asking you for your details. Thank you for them. We will get an autographed copy of Dennis's book to you when I get in touch with you as soon as I can. Dennis, back to the topic at hand. Saving doesn't, there's a very little leeway that you have as given the interest rates these days. It is growing your savings that is the chief, problems, so to speak. So can you grow your savings? And obviously you will say yes, but how?
Through investing, like I mentioned, the 2 main things the rich invest in is stocks and properties. So when I first started, I didn't have a lot of money. I started with about $50,000. So stock was the only choice I have, and which I started in stocks. And in the stock market, the good news is every few years, the bull market will come, the bear market will come. So the previous phase we had was from 2003 to 2007. So actually, I was too early. In 2002, I went in already. I put all my money in, but the market only bottomed in 2003. But despite missing too early by 1 year, by 2007, my stock portfolio has gone up by over 200%. It seems fantastic, but it's actually just average because STI over the same period has gone up 200% from 2002 to 3009. So I was just doing a bit just like the market. So even if you would just invested in the STI ETF in the same period, you probably get the same return. So actually to have $100 and triple it to $300, or 100,000 to triple it to 300,000, it's actually quite easy. So each cycle. So then I got out of the market, and in October 2008 I started buying again after Lehman Brothers collapse. So last 2 years I had over about 50% return, 60% return. Again, it's nothing fantastic because STI actually gone up 100%. So in actual fact, I underperformed. But 60% in 2 years work out to 30% a year. So again, that's how I sort of doubled my money.
Have you ever made a bad investment? Something that you're still sore about?
Definitely. I can tell you, the thing about investing is you don't have to be right all the times. In actual fact, you can be wrong 4 out of 10 times. I have my share of bad investments. In actual fact, all the investors, including Warren Buffett, they will tell you all the share of their mistakes. So a true measure of a true investor is you must admit a mistake. That means once you make a mistake, you must be willing to cut loss and say that I will make a mistake. It's okay. It's not the end of the world. But we don't just hold on to our mistakes or the stocks even if it's plunged.
On that note, Dennis, thank you so much for joining us this evening. That, of course, was Dennis Ng. He's the author of Mastering Your Personal Finance. He was joining us this evening on Money Wise. If you have more for Dennis, you can always drop us an email at 938live.sg. Once again, thank you for listening. Thank you for all your calls. And Susan, we will get your book out to you. Once again, thank you to Dennis Ng.